Question number 1. HPLC is a manufacturing company. It has applied a rate of factory profit of 25% for some years. Its draft statement of profit or loss for the year ended 30 June 2023 was as follows. Revenue 370,000. Inventory of finished goods at 1st July 2022 25,000. Cost of production 237,500. Inventory of finished goods at 30 June 2023 27,500. Cost of sales 235,000. Gross profit 135,000. Factory profit 47,500. Administrative expenses 40,500. Distribution cost 31,000. Profit for the year is 111,000. The following information is also available. The inventory values and cost of production were all shown at transfer value. The increase in the provision for unrealized profit was included in the administrative expenses. Read source A in the insert. Calculate the value of the following at cost. Inventory of finished goods at 1st July 2022. So we minus factory profit from beginning inventory of finished goods 25,000 multiplied by 25 upon 125 is equal to 5,000. So 25,000 minus 5,000 is equal to 20,000. Cost of production is 237,500 multiplied by 25 upon 125 is equal to 47,500. If we minus 47,500, which is factory profit, so we will get cost of production 1,90,000. Inventory of finished goods at 30 June 2023 27,500 multiplied by 25 upon 125, which is 5,500 factory profit. If we minus factory profit 27,000 minus 27,500 minus 5,500 is equal to 22,000. Now additional information is given. After preparation of the draft statement of profit or loss, the following items were discovered. Administrative expenses included 12,000 of cost, which actually related to the factory. During June 2023, goods were sent to a customer on a sale or return basis. The goods had a selling price of 3,000 and a cost of 1,400 before factory profit. These had been treated as having been sold in the draft statement of profit or loss, although by the year end the customers had not declared an intention to buy the goods. A delivery van had a carrying value of 17,000. A review on 30th June 2023 showed that it had a fair value of 12,500 and a value in use of 13,000. No adjustment had been made as a result of this review. The company was facing legal proceedings in July 2023. The company's lawyer had advised that the company had a 35% chance of having to pay a fine of 8,000. Prepare a corrected statement of profit or loss for the year ended 30 June 2023. Revenue. In question source A, revenue is given 370,000. One customer returned goods of 3,000. So 367,000 is the revenue, and the working one you can see 370,000 minus 3,000 is the 367,000. Cost of sales. Opening inventory of finished goods is given in the question 25,000. Transfer value in working 2. Transfer value of goods is shown in working 2. 190,000 is the Cost of production plus 12,000 of administrative expenses which were mistakenly recorded into the administrative expenses. So total become 192,000 and 25% factory profit is added. So it become 125%. So total transferred value is 240,000. Closing inventory working 3. Closing inventories cost was 22,000. 1400 goods returned. So total cost of closing inventory is 23,400 and then factory profit is added 125%. 29250 is the closing inventory value. In this way, our cost of goods sold is 235750 minus from the revenue. So we get gross profit of 131250. Admin cost working is admin cost is given in the question 40,000. Then provision for unrealized factory profit will be deducted, which is the difference of inventories 25,000 and 25,000 and 27,500. The difference is 2,500 and factory profit is 25 upon 125. So 500 was mistakenly added into the admin cost. So we are deducting now. Error of 12,000 which was mistakenly added into the administration cost. Now we minus. So corrected admin cost will be 27,500. Distribution cost is given 31,000 in the question, no adjustment. In this way, we will get ordinary profit 72750. Factory profit is 48,000 because the cost was 192,000 and 25% of 192,000 is the 48,000. Then difference of inventory is 29,250 minus 25,000 into 25 upon 125. 850 is the increase in provision for unrealized factory profit. We minus. And then at last impairment loss 4,000. Impairment loss is calculated in working 5. Carrying value is 17,000. Recoverable amount, as we know, recoverable amount is the higher of fair value or lost fair value, higher of fair value or value in use. So value in use was 13,000 in the question. So recoverable amount become 13,000. Carrying value minus recoverable amount 4,000 is the impairment loss. So impairment loss we charge to the income statement. In this way, we get profit for the year 115,900. State the accounting concept being applied in the treatment of the goods sent on a sale or return basis in item 2. In item 2, if we see in item 2, during the year goods were sent to a customer on a sale or return basis. So under the realization concept, if the goods are not confirmed by the customer, so these are not shown in the income statement as a income. Income are not recorded until they are realized or they are confirmed by the customer. So realization concept is the answer. Explain your treatment of the legal proceedings in item number 4. In item number 4, there are 35% chances of fine if contingent liability less than 50% likely to happen or possible. In this case, no amount is included in the financial statement, but a note to the accounts is given about the contingent liability, so it will be shown in the notes. Additional information, the directors are considering stopping the application of factory profit. Advise the directors whether or not to stop the application of factory profit. Justify your answer. If factory profit is not added to the cost of production, it could affect the accuracy of the cost accounting. It may affect pricing decision, profitability decisions, profitability analysis, and financial statements. The cost of production includes all relevant costs in the manufacturing process, including direct material, labor, and factory overheads, which may encompass factory profit. In my opinion, they may not stop the application of factory profit.